cryptocurrency market, like the stock market, passes through cycles. The crypto market, like the stock market, might go into a downward spiral if negative investor sentiment drives prices drastically lower over an extended period of time. A crypto winter occurs when prices fall for more than a year with no signs of recovery. But when did it all begin? Why are investors afraid of it? What can we expect from the cryptocurrency world in 2022? But first, hello and welcome back to the channel. This is Financial and Investment Wisdom, and we're back with another incredible video. Here, we talk about the world of cryptocurrency, finance matters, and investments. So please subscribe to the channel and enable alerts to be notified of each new upload. Okay, the term crypto winter is resurfacing as the global crypto market has lost $1.2 trillion in the last 3 months. Crypto winter, which is commonly connected with the Bitcoin market decline between late 2017 and late 2018, refers to a prolonged bearish phase in which asset prices fall steadily over several months. What do you think? Is the crypto winter as awful as it seems? Well, during the previous crypto winter, the price of Bitcoin dropped by more than 84%. It fanned panic throughout the market, causing the great majority of altcoins to drop at the same time. This has the unintended consequence of causing significant redundancies in the blockchain business, obstructing mainstream acceptance and reigniting predictions of Bitcoin's demise. The crypto markets didn't show indications of recovery until mid-2019, which is one of the reasons why investors are afraid of it. Nowadays, it's bolstered by record institutional investments and growing trade tensions between the US and China, which encourage investors to seek out economic hedge assets. Even if things have changed, there are still murmurs that another winter is on the way. Because the market has only seen one crypto winter in its history, drawing analogies between the market then and today can help determine whether another one is on the way. The crypto winter of 2018 began almost immediately after Bitcoin hit an all-time high of $19,000 and $1,850 in December 2017, with the top cryptocurrency's price plummeting 70% in the next 51 days. Bitcoin has already gone 75 days since it tumbled from its new all-time high of $68,990 and has lost as much as 52% since then. There have been no visible signs of recovery. According to CoinMarketCap data, the global market capitalization, the sum of all cryptocurrency project market capitalization, decreased by 66% during the same 51-day period between late 2017 and early 2018, according to the broader market. In comparison, over the last 75 days, the worldwide crypto market capitalization has dropped by 48%. Finally, given that Bitcoin dropped 84% before bottoming out during the first crypto winter, Bitcoin's current price would have to drop to about $11,000 to reflect the same percentage loss. Let's talk about the fabled 4-year crypto cycle now. Well, there's a growing view that the cryptocurrency market follows a 4-year cycle of rising and declining prices. It's difficult to say whether this is the outcome of a self-fulfilling prophecy or not. Yet, many people link this hypothesis to the Bitcoin halving events, which happens every 4 years. According to legend, this alters the market's dynamic and ushers in a new market cycle. The quantity of freshly minted Bitcoins distributed to successful miners as block rewards are lowered by half at each Bitcoin halving event. The block reward was cut in half from 12.5 to 6.25 in the most recent halving event in 2020. What's most remarkable about these occurrences is the reoccurring influence they appear to have on the crypto market about a year after each halving. Bitcoin and most of the other cryptocurrencies in the market recorded new all-time highs a year after the 2016 halving, when Bitcoin block rewards were lowered from 25 to 12.5 BTC. Bitcoin and the larger crypto market reached fresh all-time highs in 2021, 1 year after the next successful halving. Because of the 4-year gap between these two peaks, some investors are concerned that a similar gap will exist during crypto winters. And given that 2018 was the previous winter, a second is expected this year, providing that cycles continue to follow the same 4-year pattern. However, it's vital to consider the industry's maturity today versus then, as well as other variables like improved regulation, better educated investors, and a broader selection of financial instruments for indirectly accessing the crypto market. Good day, mate. We've made it halfway through the list, and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. Now, let us talk about the exacerbating macroeconomic factors. Indeed, much has changed since 2018, not just in the cryptocurrency market, but also in the global economy as a whole. The first global pandemic crisis since 1918 has rattled financial markets throughout the world. The Federal Reserve is set to raise interest rates for the first time in 3 years, and inflation in many nations has reached levels not seen in decades. Furthermore, the overall government debt of the United States has doubled in the last decade, reaching $28 trillion. Authorities throughout the world who have ignored cryptocurrencies for the majority of the industry's 13-year history are now working quickly to comply with new regulations and legislation. These events will likely put a stop to the rash of crypto investments we've seen from institutional and retail investors over the last year, as borrowing becomes more expensive, hence making it less appealing as the cost of living rises. As a result, a cooler temperature might be created, allowing the crypto market to enter another winter. That said, it's critical to recognize the distinctions between sell-offs, collapses, and crypto winters. While the severity of crypto market movements is sometimes exaggerated by news headlines, the great majority of corrections in the crypto markets are simply sell-offs. Crashes are defined as drops of 20% to 50%, whereas crypto winters, based on historical experience, are defined as drops of 80% or more over a long period of time. Now let's take a look at what experts predict for the cryptocurrency market in 2022. Volatility is still a problem in the crypto world, and it seems like it will persist into next year. Some bulls predict greater Bitcoin prices, while others predict a drop. The most qualified academics in the space are projecting $100,000 Bitcoin in Q1 2022 or sooner, according to Kate Waltman, a New York-based public accountant who specializes in crypto. While Kiana Danielle, author of Cryptocurrency Investing for Dummies, expects Bitcoin to be volatile in the short term and thrive in the long run. Uncertainty, on the other hand, remains at the forefront of many analysts' concerns. Ollie Leach, a learning director at CoinDesk, also contributed. He explained that every time Bitcoin reaches a new all-time high, prices often reverse immediately afterward. He also mentioned that the same observation was made earlier this year, and it appears to be the case again right now. He also mentioned that Bitcoin hasn't hit a new high in over 40 days, causing some analysts to fear that 2022 will be another crypto winter like 2018. Furthermore, he recognizes that it's impossible to say for sure, but there are several upcoming regulatory measures expected in 2022 that could have an impact on Bitcoin's performance, such as the US's new stablecoin restrictions. Not to mention, prices are dangerously close to crossing below the daily 200 moving average, which many traders use to determine if the Bitcoin market is bullish or bearish. Laith Khalaf, the head of financial analysis at AJ Bell, on the other hand, believes that rolling the dice on a spinning roulette wheel is probably as good of a tool as any for predicting the trajectory of the crypto markets in 2022. Business adoption, new investment products, regulatory activity, environmental development, and central bank competition, he added, are 5 critical items to keep an eye on in this fledgling market that could have an impact on prices. The bull argument will be strengthened if cryptocurrency is employed as a medium of exchange between businesses and consumers. He also stated that such acceptance must occur in a real way, rather than as a marketing gimmick in which businesses accept crypto payments and then transfer them to traditional currencies instantly. He went on to say that crypto's volatility is a major stumbling block, making it difficult to see any progress when corporations have bills to pay in dollars, euros, and pounds, and big funds have to be reported back to their investors in traditional currencies. What do you think? Is there going to be another crypto winter? Is the crypto 4-year fable true? Share your thoughts in the comments. That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. And we'll see you in our next video.